As we see interest rates continue to climb at historic rates, has that actually affected the housing market here in Roseville, California? Now, as always, thanks for tuning in. My name is Joshua. I'm a local realtor here in the Roseville and surrounding Sacramento areas. And I have an article from Ryan Ledquist where he puts out some good points in really gauging where to find evidence that the market has indeed begun its shift into either a correction, crash, or just in general a buyer's market. So, if you don't know who Ryan Ledquist is, he's the owner of Sacramento Appraisal Blog. He's an appraiser here in the Sacramento area. And I'll put a link to his website down in the description below so you guys can go and check it out. He does a fantastic job on everything Sacramento real estate. So, if we jump right into the article, he has here the main article he has is don't get stuck on home prices, and you could go through it, but one thing I wanted to highlight, and one thing he's talking about here, is the difference between 2005 and 2006 when we saw the run up of the last housing crash, and the signs coming to it. So the first one I wanted to touch on is the sales volume. Now this is Sacramento County from 2005 to 2006, and you can see here to the previous years, 2003, 2004, we just had a lot of sales volume. And then ever since 2005, it kind of tapered off, and that really set us up for the housing crash. Now, he goes on to say that the real story behind this was the supply in the marketplace. He said that the housing supply increased 207% in the background. So, in other words, housing inventory went from 2.6 months to 8 months the next summer, and this helped set the stage for the massive collapse in 2007. And he also has a chart here that has the inventory with the median price, and you can see the inventory was historically low again, and then it continued to just rise, and that affected price. So here is the supply, the inventory in our marketplace. Now, we still are on low inventory, but the key to watch here in the future with these high interest rates is going to be the inventory. If we start to see buyers drop out or just be done with these higher prices for the meantime, and see inventory rise, that's going to set us up for, at least in my opinion, some caution looking forward in the marketplace. So if you have any properties that you are thinking of selling, please reach out to me. I'd be happy to go over some strategies that we do to maximize the amount of dollars in your pocket here in the marketplace. So if we get back to the article, he says that when prices were about the last place to look when understanding the trend at the time, and this is back in 2006, 2005 area. Now, the real story was seen when looking at listings and volume. So, what to watch for going forward, what he suggests is paying strong attention to the number of listings, the weekly pending contracts, and the number of sales. So, now we're going to jump into the actual market data for the city of Roseville and look at the active listings, the pending contracts, and the amount of inventory to see if we could see signs, right, of that market beginning to make it shift. So if we jump over here, this is from Redfin. They put out great data that you could easily go to. So if you go to redfin.com, they have a bunch of tools where you could check out. So this is the home sales, all home sales here in Roseville. It goes from January of 2012 to present day. And right now we're at basically what we saw last year as far as home sales. So homes are still selling pretty good compared to last year. We're going to need some more evidence to see if this continues to rise or begins to fall. And if it begins to fall, that is definitely telling us that the market buyers are getting out of the marketplace. So then we go over here to pending sales, and this goes from 2018 December, and you can see that we still have a big jump in current pending contracts, pending sales in the region so far to date. So this is a good sign that the housing market is still moving fast. There's still a lot of buyers here in the Roseville area. So, and then we move on to new listings. You can see here we're about the same as we saw last year. So the new listings are, if this jumps another month pretty big, and we begin to see these bars rise substantially over the next couple months, that is definitely telling us that the inventory is starting to rise, and we'll see if there's enough buyers for those inventory. And then you can see here, this is the months of supply. We're still down here at the lows. We're going to need to see a pretty big jump in order to really classify that the market has indeed begun its shift. And then these are the active listings. You can see we just still do not have that many active listings. This goes back to December of 2018. So you can see back in 2019, Ryan even has in one of his articles how 2019 is our last reference point of a quote unquote marketplace. So 2019 was our last really quote unquote, like I said, healthy marketplace. So that's a very good starting point to gather data and start to compare it to our last healthy marketplace. So here you can see 2019. There's we had a good amount of active listings, and then since then in 2020 and in 2021, obviously there you have it. This is the data in general for Roseville Marketplace, and there's not the signs yet to say that the market has indeed begun its shift. Here in Roseville, I've noticed we've been getting not as many offers as we once saw compared to last year. So interest rates may have to do something with it, as well as we haven't seen as many showings, private showings, and as well as open house foot traffic. So we're seeing the subtle signs that demand is maybe waning off a little bit, but we still need more data to make a full conclusion into the future. Well, as always, I appreciate you guys watching, and until next time, see you soon.